This is a capital gains tax computation for a question where there's a number of disposals, including shares, a home, and an assorted number of personal items. So we bought the shares in 3 blocks, 7,500 in 1995 and 12,000 in 2001. Sales price for the shares is €20, and therefore we can work out the sales price of each tranche of shares by multiplying the number of shares by the amount. In addition, we can work out the cost to us by multiplying them by what we purchased them for, but we'll also use the indexation that's allowable for capital gains tax. So for 1995, that's 1.277 for the 7,500 shares and 1.144 for the 5,000 shares, both of which were purchased for different amounts. We can do the same thing for the 2001 purchase, but we need to work out how much that is first. So only 1,500 of the 2,000 shares were actually sold at this time, and so we got 30,000 for them. The indexation allows 1.087, and so the gain is 13,287. The gains from 95, 2000 and 2001 are added together to give a total gain of €166,780. Where an asset such as the sculpture is disposed of for less than 2,540, which is the marginal relief rate, in that situation, the asset is deemed to have been sold for 2,540. So the loss here is 2,540 minus the cost, which is 4,250, giving a loss of €1,710. In the case of the principal private residence, the taxpayer was for a number of years resident, then away for a number of years in a situation where they could be deemed resident, and then in other situations they were considered not to be resident. So what we have here is a period of time where they were resident of 5 years, where they were working in Paris for 4 years. That's deemed to be resident because you get 1 4-year period of that. They then returned for 6 years, were non-resident in Dublin for 7 years. The final year before the sale of the property, the taxpayer is also deemed to be resident. So we need to apportion the sales price for the number of years that we are deemed to be present, which is 16 out of the 23 years. So when we work out our net sales price, we multiply it by 16 and divide it by 23. Subtracting the relief from that 333,850 gives the amount of the gain that doesn't qualify for principal private residence relief, and that's 101,607. We can then subtract the purchase price as indexed to give us a net gain on this particular sale of 49,250. For the watch, the taxable gain exceeds 2,540, so the amount that's chargeable is the 2,950 minus 2,540 divided by 2. The sale of the wasting chattel furniture doesn't attract a capital gain, so the loss isn't allowable either. So the total gain is made up of the shares, 166,780, the sculpture loss of 1,710, the house, which is 49,250, and the watch is 183. With a loss carried forward of 1,200 and the annual exemption of 1,270, we have a gain of 212,003, and therefore the capital gains tax is 33% of 212,003, which is 69,970.